All right, let's jump right in. If you've been keeping an eye on the housing market, well, the end of 2025 gave us a little bit of a holiday surprise. A really unexpected twist, actually, that has everybody asking, what does this mean for the year ahead? So, what was all the buzz about? It all boils down to this one number right here, 6.15%. That was the average rate for a 30-year fixed-rate mortgage right as we were wrapping up the year. But, why is this one little number such a huge deal? Well, because that was the lowest we saw mortgage rates go in all of 2025. I mean, think about that. Freddie Mac reported that rates haven't been this low in 15 months. It was this collective sigh of relief for a market that has been under some serious pressure. And this chart, wow, this really puts it all into perspective, doesn't it? It just shows the wild roller coaster we've been on. Just look at that peak earlier in 2025. Rates were soaring above 7%. Even just a year ago, we were looking at 6.91%. So that drop to 6.15%, that is a massive change in a pretty short amount of time. And this wasn't some fluke that only happened with 30-year loans. Nope, the trend was happening across the board. The 15-year fixed rate also took a dive, landing at 5.44%. This tells us it's a broader, positive shift in what it costs to borrow money as we're kicking off the new year. And that, of course, brings us to the million-dollar question on pretty much every potential homebuyer's mind, right? With rates dropping, is the affordability crisis finally over? Can we all go out and buy a house now? Okay, but this is where we kind of have to pump the brakes. According to experts like Lisa Sturdivant, who's the chief economist at Bright MLS, lower rates are great. They definitely help, but they don't just magically fix the entire affordability puzzle. So for you, this is a classic good news, bad news situation. To really get why, you have to look at this number, $2,740. What on earth is that? That's the typical monthly payment you'd be looking at for a median-priced home, even with these new lower rates. And that's the tough part. For so many people, that number is still a massive financial wall to climb, making that dream of owning a home feel, well, pretty far away. And this is exactly what economists are talking about when they use that term priced out. It's that frustrating gap where, you might have a good job, you can get approved for a loan, but the actual cost of the house is just too high to handle month after month. So what's the actual fix here? Well, economists will tell you there's no silver bullet. It's really a three-part recipe. First, we need these rates to stay down. Second, home prices need to just chill out. That crazy growth has to slow down. And third, our paychecks need to start catching up. It's a marathon, not a sprint, for sure. But it's not all bad news. Despite that long road to affordability, these lower rates are already starting to create some positive ripples in the market, which is really encouraging to see. And that glimmer of hope, it looks like this, a plus 2.6%. Okay, so what in the world does that mean? That's the increase in pending home sales for November compared to the year before. Now, pending sales, that's just a fancy term for signed contracts on houses. And they are an awesome sneak peek, a leading indicator of what actual sales are going to look like in the next month or two. So seeing this number go up is a very good sign. And like Joel Berner from Realtor.com points out here, this is happening during the holidays. Typically the slowest time of year for real estate. This just goes to show you that buyers are out there, they're ready, and they're just waiting to jump back in the moment they see a little bit of an opening. So what's coming up next? We've all got our eyes glued to two big dates in early 2026. The jobs report on January 9th, and then a major inflation report on January 13th. These two reports are going to give us a much clearer picture of where the economy is going, and that, in turn, will directly affect where mortgage rates head next. Which leaves us with the big question for 2026. Are these lower rates really enough to overcome this massive affordability crisis? We've seen that they can create a spark for sure, but is it enough to actually start a fire and get the market really moving again? That's what we're all going to be watching.